You're listening to Home Sweet Home with Russ, McClellan, and friends. And here's Russ.
Hey, welcome back to Home Sweet Home with Russ, McClellan, and friends. I'm now on the phone in the land of COVID with my man Michael Maher at Prime Lending. He always comes in on our fourth segment, and we talk about lending, credit, enhancement loans, debt-to-income ratios, you name it, credit counseling, pre-qualifications. How you doing, Michael?
Good. How you doing, Russ?
Oh, great. Man, Jay Witherbee, he's a stud. Known him a long time. I a lot of memories with that guy. It was neat to have him in studio, and we're having a good time. So what I want to do with you, Michael, is where are we? Kind of check in within the land of COVID virus and credit. What's going on?
Yeah, so rates are still holding steady. So now's an excellent time to, if you haven't already, explore the refinance option, depending on how long you're going to be in the home. That could be a great option to help shave some money off your monthly payment, and then, maybe pull some equity out if you're trying to do some renovation. Just a great time to at least explore and ask the question, because we don't know how long these rates are going to stick around for. So, make hay while you can, and then, hopefully it's a benefit to you. But I've been getting a lot of questions lately on credit. And the way I like to kind of view credit is it's more of an art than a science. There is some stuff that works well that we coach people on to help get scores up, and there's some kind of secrets to the trade that we know. But credit in itself is, small little things can make a big difference. But basically, there's 3 tiers of credit. You have your lowest, which is like credit cards, which anybody can get. You have your second tier, which is things like installment loans. So whether that be a car loan, trailer loan, ATV loan, that kind of thing, which you need a little bit more paperwork, sometimes a pay stub, and some, basically verifying a little bit of income to qualify for those. And then the third tier is your mortgage credit, which takes a broad approach and takes a very grand view of your entire credit portfolio, your entire credit profile, and gives you a score based on that. And the important thing to know about these tiers is that Credit Karma, some of these other monitoring services, while they provide a lot of value and can tell you kind of where your credit is at, it's not the end-all be-all. And I've seen some scores come back of 100 points or more difference. Now, that doesn't happen a ton, but it can, because Credit Karma typically is going to monitor those lower 2 tiers, not as much as a mortgage company that would monitor that third one. So it's just important to note that while you're out shopping, and if you think your credit score is higher, get an opinion, go and actually get pre-approved first off. You wouldn't go to the store without your wallet. It's the same kind of thing. You wouldn't shop for a house, especially in today's competitive market, without first getting pre-approved and knowing your budget. And on top of that, if you work with someone like us, we can tell you exactly what you might need to do to get your scores up if they come back lower on, say, one of those credit monitoring services.
Right. So when you're doing your pre-approval letters for our buyers, and we talk about that a lot, where you really try to put yourself in the pole position and make your offer as strong as possible. And when you're in a competitive world, that's a seller's market, essentially. Lots of times we're competing against other offers. So when you're doing your pre-approvals, how much difference is it to do the pre-approval based on the subject to verification of income and employment and appraisal versus an underwritten approval? Where are you in that process? If somebody said, "Hey, I want to get underwritten approval," do you have that ability to do that, Michael?
Yeah, absolutely. And it's important to do that because things change. I just had this happen recently on a client and this is where sometimes approvals can come and go, and it's about working with a team that can kind of call an audible at any moment and still get the job done. So basically we had a client that had a score that was above a 720, and it was a longer closing. I think it was about 5 or 6 months because it was a new construction, so the home was being built. Well, credit reports are typically only good for about 120 days, and then we have to repull. So we repulled, but before we did, I checked I had gotten his score up first off from our initial pre-approval, so it was above a 720. And all of a sudden, before we pulled, I said, okay, let's check the balances, make sure we're not going to get any surprises. All his balances were less, and we re-pulled, and his credit score actually dropped about 5 or 6 points below 720, and it was no longer approved based on the underwriting, the automated underwriting system. So we had to call an audible, and we got it all figured out and dialed in and closed. But it's very important to get that underwriting approval, but that doesn't mean things can't change. So when things like that happen, it's good to just have someone in your court that can go to bat for you and just think outside the box. I think that's the most important thing. That doesn't happen very often. In this case, they were really trying to squeeze the maximum amount that they could out of this particular pre-approval, and they were in a very unique situation. So that doesn't usually happen, but it can sometimes, and that's where just going from, say, a 720 down to a 717 can change that, because credit's based on 20-point tiers. You go from 600 to 620, 640, all the way up to 800. So every time you enter a new 20-point tier, it actually can help on your interest rate, your mortgage insurance, all sorts of stuff. So that's where it can make quite a bit of a difference to get those credit scores up.
Yeah, so is the old adage, no credit, bad credit?
No, I actually have someone right now in contract that has no scores whatsoever, and they're approved and buying a house.
So that's a myth.
Yep, it's 100% a myth. Now, there's some extra work that goes involved, that's involved in that, but it's definitely not it's not a no. You just make sure you have, you meet the Fannie Mae or Freddie Mac requirements, and you can 100% buy a house with no credit score whatsoever.
Yeah, that's good to know, because there is a lot of people that are cash basis out there, and especially if they're first-time home buyers, they may or may not have a score depending on their history. What about what's the timeline? If I said, hey, if I have a buyer who wants to get underwritten approval, we want to make the strongest offer we can for them when we dive into that competitive arena, how long do you need to get the verifications to get underwritten approval once they make the application?
If they can get me all the information, it can be 24 to 48 hours, and I can have them dialed in.
Through the underwriting process?
Yep.
And that would include verifications, or is that a little longer?
Yeah, no, that includes verifications of employment. Those are even more so important right now because a lot of hours and things are fluctuating. So those are kind of a staple at this point in any pre-approval that we're getting, unless they're typically salary. But hourly employees, it's very important in this COVID era that we're in, because, if someone went from 40 hours a week to 32 hours a week, we need to know that before they're out writing offers, so that we know exactly that they are 100% approved.
Right. Well, if you want to, I'm thinking about it. I'm going to get your number out there. So if you are interested in figuring out where you're at, and trust me, there's a lot of people paying rent right now that could be buying a home and they don't know it. The other thing that, talking about myths, I mean, how many times, Michael, have you, before I give your number, how many times have you had somebody say, well, my bank turned me down?
Oh, countless.
Yeah. And sometimes it's not the banker's fault, because maybe that particular bank only had a couple programs and maybe you didn't fit into that cookie cutter box. Well, what you do, you have a whole host of opportunities in different programs, don't you, Michael?
Yeah, definitely. From zero down to low down payments to jumbo products to enhancement or renovation loans, construction, all sorts of stuff. And to be honest, if we don't have it, I know people that do, whether that's getting HELOCs and just all sorts of things that fall in the realm of mortgages and home loans. We're a great resource to reach out to. And like I said, if we don't have the answer, I'll get it for you. Yeah,
you do. And I've seen you do it. HELOC, by the way, for people that don't know what that means, it's an acronym for Home Equity Line of Credit. So quite often you tap your primary mortgage if you have a bunch of equity. That might be a way to go for some people, and I've seen you do it. So it's not just a sales pitch. I mean, it's legit. That's what I love about you and Sharon Crockett in Prime Lending. You're all about the consumer. You're really doing a good job for your client. So if you want to get a hold of Michael, I'm going to put your number out there, Mike. It's 425-760-8824. I'll say it again, 425-760-8824. Got a 425 number because you once upon a time were one of those dudes on the west side of the mountains, but you actually live on this side of the mountains.
Exactly.
And it's a pain to change the number. But you're actually, you have a home in Entiat. You're often, you're available just about anywhere and everywhere. And you're a good guy. I mean, I think that's the key, right? When you're going to work with somebody, there's more to it than just X's and O's. And so often with so many people, you become a statistic or you become just another customer and not a friend. I mean, what I've seen with your relationships, you kind of tend to follow what I've done for a long time, and that is many of my clients become my friends after we met, and we just used real estate as a vehicle to develop that relationship. And it's a good time, and because you're here to stay and you're here to help people. And I also can tell you, we just did some more last week where you called an audible, an adjustment. They made some phone calls, and you collaborate with people within your organization, and lo and behold, it's amazing what you can do if you stir the soup. So I admire what's going on. I know it's a strange time, and seems like every month we think this will be the last month of COVID, but I don't know. Time will tell.
Yeah,
but
it continues to drag on.
It does, but you're getting the job done, and man, is there a serious invasion. So I appreciate you calling in, and stay safe out there, buddy.
Yeah, you too.
And if you have any questions, call Michael. He'll give you some credit counseling at any time, so confidentially. All right, well, thanks for tuning into the show. As always, tough times don't last, tough people do. Throw that phone in the drawer, say hi to your friends and family, get outside, get some sunshine, breathe some oxygen. The world's going to keep spinning, people. We will get through this. Thanks for tuning in. Have a great Saturday.
The preceding program is sponsored in part by Keller Williams, Prime Lending, and Frontline Real Estate.